Hi, welcome to this video day, which is on the 6th of October. It's Sunday. We're just going to be looking at doing simple fundamental analysis to find big trends and then using very simple technicals to basically get in on the trade and manage it. Now, in terms of fundamental analysis, a lot of traders shy away from it and they just want to do technicals, but you'll never catch big trends, okay? It's the big fundamentals that drive the big trends. You want big trends, big profits to cover your inevitable losers, of course. Now, in terms of today's video, we're going to be focused on what we consider to be the most overbought major currency of all at the moment, which is the Canadian dollar. I'm just going to look at trading the CAD at short against the USD, the JPY, and the GBP. And we've covered these pairs in previous videos. We've got some profit on the board from them, but there's plenty more to come. Now, in terms of the trade setups, we're going to go through obviously the big fundamentals behind the charts, and also I'm going to give my technical levels of entry, stop and target. Now, in terms, just before I do my analysis, just please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, and also all our fundamental analysis as well, you can click on the link beneath this video, get live access to our member center, and for a limited period you'll get a bit of a reduction on membership fee as well. Right, now in terms of the pairs, the one we're going to do first is USD CAD. Right, we're on the USD CAD, a monthly chart, just very quickly first of all to see the big levels of support and resistance, and you can see our target on this chart as well. And it'd be generally bullish of the CAD from back here, and we do get up, we get above this 20-week moving average and hold it, up, down, down to the 20-week moving average, and we're looking for this to provide support. You've got four tiny candles over the last 4 months, so not too much volatility, okay? But when we get to the daily chart, you'll see where we are so bullish of the USD. Now, from our point of view, you've got support there, okay, which is kind of trajectory, and also on those three bodies there, which is 132. And just need a little bit of strength next week to basically, ignite the USD up move, so to speak. Where could we go to? We're definitely going to go to there, in our view. Probably going to go a little bit higher, towards the 140 level. Okay. Now, in terms of where the fundamentals look behind the chart, we can easily get to this level. Okay. So if it does get up there, it's going to be a really good move. It's 700 pips. And the risk, from current levels with your stop just behind this double trend line support is relatively small against the reward. So it's a good looking trade in our views. Let's go and do some levels of entry, stop and target on the daily chart, and also round up the fundamentals and sentiment. Right, on USD CAD daily chart, I'll draw my levels in a moment. But first of all, let's just have a look at the bullish fundamentals for the CAD, which the market sees them as bullish, but they peaked. Okay, it's not going to get better for the Canadian economy over the medium term, and it's going to be bad for the Canadian dollar. Now let's look at why. Point number one, the market expects no rate cut until mid-2020. They are going to indicate a cut pretty soon, within the next few months, and they'll be cutting way before mid-2020 in our view. Now this no rate cut until 2020 goes for the market expecting strong growth for Canada of 1.8%. Yes, the kind of median economists forecast for 2020. That's way too high. The reason it's way too high is there's already a warning that the Canadian economy is about to slow up because business investment is really slowing, particularly in the oil and gas industry, natural gas industry. When business investment starts to slow, then the economy starts to slow. But also you've got the big picture as well. Global growth is slowing, and the global slow up is accelerating. Canada is an export orientated nation, not just commodities, but just generally. You got trade wars, which aren't helping. Commodity prices are going to fall a long way in our view. So that is on the Bank of Canada's radar already. They've already talked about the risks going forward. Those risks are there, and Bank of Canada are very mindful of that. Now, also, they're very mindful of this. Point number 5, consumer spending. Sorry, I didn't put spending in. It's the slowest it's been as an annual rate since the recession. Consumer spending is so important, okay? And it's really slow. And that will be on the Bank of Canada's mind as well. So, the risks are for the Bank of Canada to cut earlier than the market expects and the economy not to do as well as the market expects. So it's not getting better in our view. Now, obviously, two sides to any currency. US fundamentals, a lot of talk about US dollar really going down hard. But if you look at it, the USD bounced back from last month's interest rate cut. And the market sees a 90% chance of a rate cut this month as well. So that's already discounted. Okay. Also, in terms of the US dollar, it is a safe currency against slowing global growth. And if we get any sort of big sell-off in stocks or investor nervousness, investors are nervous, then the US dollar tends to do well after the Japanese yen. Obviously, I've covered CAD JPY, which I really like, which you can go and take a look at. Let's go to the technicals now. In terms of this one, it's been kind of slow and steady for us. If you've seen our previous videos, we've got a nice trade in here above the 131 level, followed it all the way up. 20-day moving average holding, quite nicely. And then you get the big slice with the red. Took us out. We ran on a bit to the downside, steadied up here, got back in above 132. We're still holding the trade. We're above 133. So I haven't really got much out of this second trade at all. And I think most traders would agree with me that a lot of pairs have done this. You get a lot of congestion with low volatility. Here in particular, very frustrating, but just basically holding around the 20-day moving average, not too much downside. You get a big blue punch up, and now we're above the 133 level. So how would I play this one if I was coming in fresh? Well, you got obviously the blue candle tail there, and then we come down. That tail doesn't get up to that tail. I wouldn't wait for the blue tail to get taken out. I'd wait for the red body, which goes with the blue body there. That's about 133.40. Okay, where would you place your stop? Well, I'm just doing this on strength, by the way. You could actually, if the dollar did correct, you could look to buy on strength. We're just looking at if it goes stronger next week. That's a good level of support. It's here when you bash against resistance, get through on the big blue, hold across red, trying to get through, big blue bounces, 132 level, very strong support on the monthly charts. You just tuck your stop back behind 132, and then you come in at 133.40, and really we're looking for 140 on the upside. Okay, now in terms of could we get to 140? I think from our reading of the fundamentals, yes, we could maybe even overrun that level. You could say you've got some resistance up here, but I just think that'll get run. Okay, if we do go up and we really clear out the 133 level, okay, so get 133.70, something like that, you pull your stop nice and tight in behind the next round number where you kind of break this sort of choppy period here. Just tuck it behind there. It's got a decent risk to reward on it. From long-term perspective or medium-term perspective, I think we're going 700 pips odd higher from here. I think it's a good risk to reward trade, and I think Canadian dollars run out of the bullish. The bullish fundamentals are peaking, which I've already said. Now, in terms of the next chart, it looks a really good setup as well, which is CAD CHF. So let's go and take a look at it. Right, we're on CAD JPY daily. I'm not going to do the longer term chart in this video. Just give you my target, which is 70, which is well off the bottom of the computer screen. I think we could get there before the end of the year. We might even get there quite quickly. Now, in terms of the CAD, it is for us the most overbought currency, major as we've just said. JPY very oversold in historical terms. So it's going to correct its oversold status, and also we've got a very nervous market at the moment in terms of people worried about the global economy, what could happen to stocks, etc. In that sort of environment, the yen, number one safe haven currency, will appreciate. So unless things dramatically turn around, the JPY is going to remain firm. Now, last video I pointed out this high volume candle on big institutional order flow, big red, a lot of order flow on this as big institutions readjusted their portfolios to what's going on in the bond market, and basically it's in response to nervousness in the global economy. In brief, that's a brief description of why that candle is decisive for us. And we did actually sell that candle. Got a nice trade down, then we got taken out as we bounced back above this 20-day moving average, and then we wanted to sell it into 82. Felt 82 would be a really strong level, so this candle obviously decisively takes out the level, and I just draw my line. There we go. Poke at the level, can't get through, off, blue, then we go down, poke at the level but not quite there, another one, then a big bearish red, and we're down to 80. Now we're in at 81.70. We're at 80.32, so not much profit out of this one yet, but a lot of profit to come. And I think it's opportunity for new trades to come in as well. If you're bearish like us, there's a lot of downside potential. You can either sell a rally or a break lower. Now, in terms of a rally, where could we rally to? I don't think we're probably going to get back to 82. Our stop is behind this level at the moment, though. I want to bring it down if we break lower. I'll come to selling on a break lower in a moment, but we're at 82.40 with our stop, and I think in terms of a rally, there's a trajectory. Sorry, if I can get my mouse to work. There we go. You got 1, 2, 3, 4 bodies there, and that body there is obviously the important one, the big red. Now, obviously, you could sell it back towards the 81.40 level where these two lines cross, and you've also got the 20-day moving average as well. Stop behind 82. So if we rally, just look for weakness off the level and sell. Okay. Now, what about a break lower? My own view is you can sell on a break lower as well. Your stop can be tighter if we break lower, in my view. Two bodies, big blue slices. You've got a few more bodies over there, but you get the general idea. Up, we're holding. I would just sell red through the level, through that tail. And then, if that occurred, you could have your stop a little bit closer, like 81.80. So really, you're going to be risking around just 200 pips on entry, okay? But you've got 1,000, hopefully, to come. And I think if we do break lower, we're going to start to really gain traction to the downside, and then you can bring your stop down, reduce the risk on the trade. I really like the look of this trade. Great risk to reward, really clearly defined levels, and the fundamentals, the way we see them, just out and out bullish for the yen. Now, I really like this pair, and I also really like the next pair as well. The next pair is slightly different in terms of the fundamentals. I'll explain when we do the chart. It's going to be, of course, GBP CAD. Right, GBP CAD daily chart. And in terms of this pair, we do have the most overbought major currency, which is the Canadian dollar, of course, in our view, and the most oversold by far, the British pound. British pound just sold off really hard on Brexit news. It's probably about 20% from fair value, overall against the basket of currencies. Only Brexit that has driven it lower. Now, I've done a video recently on this channel in relation to the GBP and why we're so bullish. It's slightly different in terms of the fundamentals of, let's say, CAD JPY, where the fundamentals are pretty clear cut. You know, the global economy isn't going to turn around quickly. It has a big fundamental in place. This one is more susceptible to what I would call event risk, because everything is about Brexit. Okay, so you know, if negotiations aren't going well, the pound goes down. If they are, it goes up. It's that sort of general theme. However, yeah, the chances of a no deal are extremely low. And I've explained this in our previous video. A deal will probably be done. And of course, that means if a deal is done, the pound is going to soar. And there's so many speculators short, it's already bottomed in our view. Got a trade there long, stopped out, bit of profit, not too much. Then again, we had a go, stopped out. Another trade that was profitable, but not really big profit. Okay, and then we've come back in again. Now, in terms of the way this chart looks, I think it looks really attractive from a risk to reward point of view. Now, in terms of when we come down here, we steady up there, which I think is about 162.50. Okay, 1, 2, 3, 4 bodies. You get a big launch candle there, or big candle up. 1, 2, 3, 4 bodies up. You do have a couple of tail pokes through, but came back above the level. Sorry, I'm just drawing a trajectory. So we did come down on Friday, but it's not a big move. This, I've drawn that trajectory there. You get the idea. There's a red tail, blue tail goes through it, and then we're off, and then we come back to rest on the level. Where would you come into this one if you wanted to be long? Here. You want basically, sorry, I need to get my line straight. You want to really clear out tail, body, 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 big red body, get through that level, okay? Then, where could we go to? Go up to here. I think we'll actually get higher than this, but this is the target I've got at the moment. We could go to 180, 185 easily if we see the Brexit, kind of what I call hysteria about a hard deal unravel, which I think it will. So just to the first level, it's 4-1 in terms of risk to reward on entry, but much more obviously if we get to the higher levels. Now I'm not too worried about these candles here. Okay, spec shorts are really big, and there's going to be stops here and behind here. So there's big stop clusters in our view. A lot of people sold that last decline. Their stops are close, so run the stops, then up to 177, maybe 180 or 185 longer term. Looks really attractive to us. Also, in terms of the risk reward on entry, you could bring your stop up once you clear these candles out. There, I would just go behind that level there, where that blue body pushes up and those two bodies hold the level. So the risk reward would obviously get less, let's say, if we do punch out these candles, which I think if we get through this level we should do. So from my point of view, this one's a really good one. Great expected payout against the risk. It's kind of different in terms of the fundamentals, because you do have Brexit news all the time, but our view now is so many speculators short, not much selling power to come in, chances of a no deal are low, and we have worked our way up. Okay, so again, another nice trade setup. CAD for us, very bearish, as you probably gathered from this video. But that is the video for today. Thank you very much for watching me as per usual. Take care. Have a good day.